Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, it's about 10 after 8. This is going to be short and sweet. We got CPI coming up at 8:30. I've been saying all week, I will say it again. Unless the bears actively do something about price, we will go to 5,700. They continue to not actively do anything about price, and now we're trading, what's the high of the moment? High of the moment is 56.90 half. Now, in 18 minutes, they have their best opportunity to retrace this market if they're going to, okay? CPI is going to be volatile, but after the initial shake and bake there, the question is going to be whether are we seeing inflationary pressures increase? Are they decreasing? Are they the same? And, how does the market want to react to that? Don't game this number. Don't guess about what the reaction is going to be and then do something. Let the number play out just like you would a jobs number, just like you would a Fed announcement, and then higher lows, lower highs, and see what happens. We're long from down below, down around 45, 46. I've got to stop sitting at 76, which I fully expect in the shake and bake to get taken out, in about 17 minutes. You can see that the band ride continues. We're actually above the second standard deviation upper band right now. That is not necessarily unsustainable, but you would expect to see this probably back off in the next couple of sessions and rest back underneath the upper band. Hourly, you can see compression, expansion, compression, expansion. That's just, we've been sitting around here for a couple of days, consolidating at or around the highs. Again, the bears have not been able to actively do anything about price. Whether you're talking about the inability to take out the 50 area, whether you're talking about the inability to take out 5620s here, just that has been the theme of the last 10 to 12 sessions. And then they go ahead and lift. So as we head into the CPI number, you've got volume weighted average price trading 56.83, proprietary moving average 81.75. Hourly mid band is 81.25. On the upside, you've got 5,700, 57.10, up to around 57.27. That would be an engagement pretty close to that third standard deviation upper band, and I think you'd see some kind of a pause in and around there. On the downside, the first thing they have to deal with is this hourly mid, which we just talked about, 81.25. Then, if they're going to seriously bring it in, they have to bring it back to the consolidation area and then win the consolidation area. So that would be confirming, say, 56.30 to resistance, and then trying to take a look at the 9-day down there at 56.06. That's a long way from where we're trading. And there's going to be a lot of fits and starts on the way, but it's kind of taken, when it blasts off like this, there's not a lot of support between where it lifted off and where it is. So it's consolidated overnight in anticipation of the number, but we'll see. That's a little bit of the lay of the land. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.